All righty, folks. Last week was a monster week. We got the CPI reading along with PPI. We also started getting the big banks reporting their Q3 numbers. Next week will not disappoint. More banks, lots of regional banks, Tesla, Netflix, existing home sales, builder sentiment, all kinds of stuff. So, Mr. Bird, what happened last week? Set us up for next week. What's going on?
Well, we had CPI like we talked about last week. If it came in tame, then the market would probably take off. If it didn't, then the market may go down.
Mm-hmm.
And it really didn't. I mean, it wasn't terrible,
Right.
but it wasn't lower.
No, yeah. CPI, again, I assume we're talking about headline. Headline came in
Yeah,
flat.
right.
Oil was a big component of that. Core did come down. Core came to 4.1, down from 4.3. I
Right.
think it could go sub 4 next month.
Yeah, I think next month we've got a better chance of it, both of them going down more, actually.
Yeah, the base effect is we've tried to help people understand is larger next month than it was the last 3.
Yes, that's right.
So,
and in between those two, we have the Fed meeting.
no, Fed meeting's November 1st.
Yeah, that's in between.
Oh, I'm sorry.
Two CPIs, the two CPI numbers.
I misheard that. So yes,
yeah, in
correct.
between the two CPI numbers is the Fed meeting. And by the way, another big thing next week is Powell speaking.
Yeah, we have. I think every Fed president is talking next week. I mean, just like 5
Well,
a day or something.
Next week is their last chance before they go into their quiet period.
Oh, I forgot about that. You're right. They're going to go into their blackout period where they can't talk. You're right.
Yeah. So they're going to get all their pulpit talk in, their bully pulpit talk in before the meeting.
Well, that's a big deal. I mean, because I've been trying to help people understand the Feds has 2 tools. There's this monetary one. They can raise rates in QT, but it really is their voice. And I don't know if you saw it. I think it was last week. The week actually, I think it was this week. No, I take that back. It was this week. Last week, the odds of the Fed raising one more time this year were 60%. After Sunday,
that was in December, though. That was December.
This year. It was this year. One more this year.
Right.
But starting Sunday, with the vice chair, followed by Monday, Tuesday, and Wednesday, other Fed presidents basically saying we've done enough. I think the Fed sees things cracking and breaking, and they wanted to get ahead of it. We're going to find out this week because we have more speakers this week. But
I agree with that. We've talked about the fact that at some point the Fed's going to break something.
Yes, we have,
and they might be starting to see that. And the other thing too, the wild card in all of this, I think, is the Middle East war.
Well, there's 2 now, right? There's one in Russia and Ukraine. There's Hamas and Israel, and either one of those could spike to involve other parties. Not good. But yeah, it's the Fed is not raising rates November 1st. There's no chance.
No,
there's
I don't
no
think
chance.
Yeah,
there's no chance.
I don't think
too many risks.
It'll be interesting to watch it, though.
Yeah, and then I think the real question is, and again, we've had this debate. I won't change my opinion. I still think they're going to try to hold rates the rest of next year, which will be the longest ever. I think the longest ever currently is 11 months, but
12 months.
Yeah, 12 months. It's going to be very interesting to see what happens going forward.
I think they will try as well.
Okay.
And when I show you some charts in this first section, the second section, I want to talk about whether we're on the precipice of risk on or risk off.
Ooh, that's going to be a good one.
Look at some charts that I created for that. But in this one of the comments that I saw on one of the videos I watched was comparing this to 2018.
Ooh.
You remember 2018?
I do.
About this time?
I do, yes.
And that was the trade war with China.
Yep. And well, it was also just from my standpoint, what I remember about late 18 is when Powell gave up. He was trying to raise rates, and he basically wussed out.
He was raising rates.
Yes.
And he was saying higher for longer.
He was, yeah. I remember.
He didn't have that term back then.
Right. It was.
But he basically was saying that we're going to keep rates high all the way through 2019.
Yep, I remember.
For a year. And then very quickly in, I think it was early Q2, he started cutting.
Yep. Yeah.
We can actually look at that to see when he started cutting. But that was one of the few times that the historical trend did not hold up, that the Q4 rally did not happen.
Very cool.
So that was the point.
Yeah.
That was the point of this, what this guy was saying. He says this might be more like 2018.
He could be right.
So I'm going to show you some comparisons between this time and 2018.
I look forward to it.
All right, let me share my screen.
Mm-hmm.
And I think these are going to be quick ones today.
Okay.
We don't have a ton of stuff to talk about, but first off, if anybody is interested in getting my newsletter, just go to breakpointtrading.net, the website where I spend all my time there now. So everything, all the research I do is done on my website.
Mm-hmm.
And for the first time this week, I sent it out using the website.
Oh, nice.
I don't know if you saw that. You should have got one. But
I did.
yeah,
I got
it should look like this if you have Gmail, but it will look similar to this even in other platforms. So Breakpoint Trading, that's what it will come from. Now this might have a tendency to go to the spam folder, by the way, because of the way it's formatted here. So make sure to check your spam folder if you haven't seen it. And then this is the subject line. If you just click on it, it will bring something that looks like this up. That's what the email looks like. Mm-hmm. And then you just click on this button right here, and it takes you right into the newsletter.
Very nice.
Right there. And you'll know if it's been updated yet. Usually it's updated by about noon or 1 o'clock Eastern time on Saturday. Mm-hmm. So you just look at the week ending date to see, and then just click on that and it'll bring the newsletter up with all the fun cartoons. Mm-hmm. And IBD changed their outlook.
Ooh, that changed. Yep.
Yep. It did say new uptrend or something like that.
Right.
Confirmed uptrend with a green arrow. And now it's orange, uptrend under pressure. Lower exposure to 0 to 20%. So, last week I said Friday was a nice rally after the jobs number. Maybe that's the start of the end of your rally. Mm-hmm. Well, it didn't last very long.
No.
Lasted less than a week, basically. Yep. Now, interestingly, even though Thursday and Friday felt kind of bad, mm-hmm. it actually ended a lot higher than the week before.
Oh, yeah.
So we are still higher than the week before. So this was last week, CPI 3.7, stayed the same, basically, but it was higher than forecast. And month over month was higher than forecast, but lower than last month. Mm-hmm. And then the core, as you mentioned, came in flat.
Yep.
PPI also was higher than forecast, but lower than last month.
Yeah, it's going to be really interesting. A lot of these numbers, and you and I hit this last week, people can go back and check. A lot of this was oil and gas specifically. That did roll over post the time they took the survey, but unfortunately it's now gone up because of what's transpiring in the Middle East. So something definitely to watch out for.
Energy's gone back up. Well, we'll take a look at that to see where it's at right now. But yeah, the beginning of October, it rolled over and started going down again, which will be reflected in the next report.
Yeah.
And then next week, here's Fed Chair Powell speaks on Thursday. Mm-hmm. There's a bunch of other ones speaking next week too.
Yeah, existing home sales is going to be a big one for this channel, as is building permits. And I think on Tuesday is home builder sentiment, all going to be really bad. I will call out existing home sales. Even the experts are calling sub 4 million.
Right.
They're calling 3.94. I think it'll be below 3.9. That's just, rates matter. And that's just where we're going. So it's going sub 4 million.
It is. But interestingly, and I actually have this is the one we looked at last week. Mm-hmm. Make this a little bigger. Interestingly, it does reflect last week's number. So 3.7. Mm-hmm. August was 3.7. September was 3.7. But remember, we looked at shelter. Mm-hmm. And shelter, while still rolling over and trending down, it didn't go down as much as people thought it would.
Mm-hmm.
It went from 7.3 to 7.2.
Right.
So shelter hasn't been having the kind of effect we were expecting, or at least not yet.
Yeah, it's coming. I mean, just mathematically has to come, just the way they're the lag effect. But yeah, you're right. Hasn't shown up yet. What was it at the peak? What was it, like 9 something? Or
Peak was
peak 2?
8.2.
All right.
Yeah. March of 23,
Okay.
8.2.
Thank you very much.
And CPI was June 9.1.
Wow. Okay.
So, and if we look at gasoline,
Yeah, look at that.
let me turn all items off again. There's gasoline. So
Yeah.
gasoline dropped down here in June, and now it's creeping back up again.
Yep. Okay.
So we'll see what happens next time. Commodities, less food and energy. That's the green one.
Look at that. Does that say 0?
It's right near 0. It actually is 0.
0. Look at that.
Yeah.
Commodities, less food and energy. Okay.
Right. So that's corn, soybeans, that type of thing. And I can actually see that in my market bias matrix chart. I have commodities down here. You can see corn right here was bull, bear, but soybeans is bear, cotton, bear, all the short term is bear.
Got it.
Lumber. I mean, these are all still, in negative territory, and they've got a ways to go. Agriculture, they've got a ways to go before they pull back up into bull territory. This is the one that I'm watching closely, though, the inter-market relationships. We'll talk about this a little bit, but these are all bullish. This is aggressive versus defensive.
So this is episode number 2. We're going to talk about this.
Yeah, we'll talk about this in number 2.
So is it essentially, just to tease it, I'm guessing you're watching a rotation that may be coming on? Is that?
I'm watching to see if there is going to be a rotation. That is absolutely right. That's the key.
Look at that. All right. Very cool. We'll leave that for video 2.
What happened in December of 21.
Very cool. We will look at that.
Identified in December that the rotation had started, even though the market was hitting new highs.
Mm-hmm.
That's the type of thing I'm watching.
Okay. Very cool.
So we'll see. So at any rate, CPI, let's see, right here. So that's next week. This is the chart for the S&P.
Mm-hmm.
We'll look at the 4 indexes here also. So one of the indicators that we might be starting the rally is from Stock Traders Almanac, where they have a MACD crossover, which I put on the chart. Okay. This is a PPO, but it's basically the same thing. But look at this downward channel right here.
Yeah.
Right. So we are still in that down channel. The thing that concerns me about this is we actually started the channel here when we couldn't make a new high back in September, came back up and touched it again, then went back down, and this is where we actually made the bottom of the channel. Now, this bottom line right here, I didn't draw that in. I just copied the upper line.
Oh, okay.
And just moved it down. And it just happened to touch both of these. All right. But we couldn't get back to it here. In fact, we couldn't get over the 50-day moving average here either. So that is not a good sign. The critical point is down here at the 200-day moving average.
Yep.
Right around 4,200, which is also the bottom of this channel. If we don't hold that, then the end of your rally is probably done.
Got it. So it gives us something to watch. How far away are we? About 150 points?
It's about 42.21 is where the 200 is. And we're at 43.27. So
that could be a day.
Well, 100 points on the S&P is a lot.
Okay.
I mean, it could be a day, but not likely.
Certainly a week.
Could be a week, though. Yes. Yeah. And on that point, let me go back to this. and take a look at
Ooh.
Stock Traders Almanac. This is the historical trend for October. And
Yeah,
we're
that doesn't
right
look
here.
pretty. That doesn't look
Now,
pretty.
that doesn't look good for the next week.
No, not at all.
Now, if you'll notice this part that I highlighted over here, October 25th, historically going back to 1950,
Oh, yeah.
this has been the trend in pre-election years, which is what we're in right now. All right, so
Ooh, yeah.
not pretty from here to there,
No.
basically a week and a half.
Okay.
But from that point on is when the rally starts in pre-election years.
Okay.
So we may have pain, and we've got options expiration coming up next Friday also. So there still could be some pain, and the market is kind of set up to have a correction, or at least to go down some. But we have to watch that 200-day moving average and see what happens when we get close to this right here.
Yeah.
And then we'll see if it's going to continue down or not. So let's take a look at 2018. So this is now. Okay. So starting in August is when this downtrend started. This is 2018 for roughly the same time frame.
Okay.
For 1 year period up till basically right now. So in 2018, the sell-off had already begun. But look where it's sitting right here in 2018. Right
Okay.
on the 200-day moving average.
Right.
And we're just above the 200-day.
Hmm.
So there's 2018, there's now.
Okay. Looks
similar, huh?
Yeah.
I mean, the sell-off started in earnest much earlier. I mean, this was 28.75 down to almost 27.75. So that right there, that's 100 points in 1 day right there.
Right.
That's what it would look like.
Mm.
That's what a 100-point drop would look like right there.
Right. Okay.
All right. So could that happen? Sure, could happen.
Yeah.
We'll have to watch and see. And this is what happened by the end of the year. So this is the drop right here.
Ooh, that's ugly.
That point right there where it got to the 200-day and kind of stop for a second.
Yep.
That's right here.
Right.
And then it tried to rally off of that, but it couldn't do it. Turned around.
Another 20% drop from there.
Yeah, by December. But now starting in December and all the way through 2019, the market rallied pretty nicely.
Well, that's because the Fed cut, right?
Yes, exactly. So the Fed, this happened right here.
Yeah,
and
the Fed
all through here, the point we're at right now, the Fed meeting, even with the market dropping here and the market rebounded back above the 200 right here, right around the Fed meeting. And the Fed said, we're going to stay higher for longer.
Yep.
We may pause, but we expect to keep rates high all through 2019.
Yep.
That on top of the trade war with China.
Broke it down. This is how I remember it, because I remember Jerome Powell trying to reestablish rates, getting off 0%.
Right.
Wall Street didn't like that. Wall Street is addicted to 0%. And Wall Street threw a conniption, i.e. this chart, and inflation was sub 2%. I think it was actually very close to 1%. Yeah. So inflation wasn't a problem. So Powell retreated. And he basically said,
and the trade war.
Yeah.
The trade war had a lot to do with this as well.
Sure. Oh, of course. But at the end of the day, I don't think the market's going to beat Powell up today, because Powell has inflation as the boogeyman to say, I'm not cutting. I don't think he wants to cut. I think he looks back at 18.
He didn't want to cut here either.
No, I think he looked back at 18 as a mistake.
Right.
That's what I think. So
that might be true, but he still ended up cutting.
And he did.
I still think he'll end up cutting next year as well.
We'll see. I like it.
So this is the one we just looked at.
Yep.
This is earnings. I put some of the earnings. This is not all of the earnings.
Oh yeah, it's a big week.
This is basically ranked by fundamentals essentially. So these are the ones coming up between now and the Fed meeting.
Okay.
So we got Meta in there. Um, Tesla's next week. It's not here because it doesn't rank high enough fundamentally. Believe
Yeah,
it or
we
not.
got Tesla, Netflix,
Yes.
Bank of
Uh,
America,
Meta
Goldman
service.
Sachs, all these
Yeah.
people. Yeah.
This is the market carpet for last week. So this is a
Oh,
1 week period.
oh, look at that.
So the market actually ended higher for the week, even though Thursday and Friday were down.
Hmm.
So, Apple did fairly well, Amazon.
Cool.
And then this is the sectors. So it's interesting what the sectors look like for the week. If
Mm-hmm.
you look at this actually on a 1 day, just Friday, it's even worse. I can
Oh,
actually
really?
do that in a second. But this is for the week. Energy, you can see energy spiked up here.
Yep.
And industrials is where all the defense names are.
Yeah, of course.
So they spiked up. Utilities and real estate
Yeah, look at
and financials.
utilities. Look at util. I
Yes,
mean,
most
utilities are
most of
getting
these
whacked.
most of these are defensive
Yeah, they are.
sectors. And you can see down here communications, technology, and discretionary all the way at the bottom. Those are the aggressive sectors.
Yeah, I don't know if you saw the news report from LVMH, obviously a very, very high-end luxury brand, but they reported last week in Europe and not good. Luxury brand is off.
Yes, right. Europe actually may go into a recession before we do.
Mm-hmm.
This is that same rotation graph, but this is on a 60-minute view.
Oh, interesting.
So this reflects only Thursday and Friday, the 2 days that
Okay.
the market dropped. And you can see it over here. It's the 12th and 13th.
Hmm.
All right. So you can see the rotation. Now remember, this is only 2 days.
Yeah. Look how
Look at
much
energy.
energy just ripped.
Energy all the way from way down here all the way up. And here's utilities, came down and went back up. Here's financials. There's healthcare. Discretionary is way over here. This is communication services, all the internet companies.
Yep.
Right there. There's the NASDAQ. And XLK is in yellow,
Mm-hmm.
but you can see it came down and is sitting down here in yellow.
Okay.
So you can see what just 2 days can do
Yeah.
with the sector rotation. And then this is really telling right here. This is for the week. And I'm doing this every week now in the newsletter.
Mm-hmm.
I'm putting in the sectors. I'm putting in the market carpet for the week. These are all for 1 week.
Mm-hmm.
There's the sectors for the week, and then the winners and losers for the week. So these are the top advancers, percent change advancers for the week, and these are the top losers. Take a look at the sectors and the industries up here in the advancers.
Yeah. Industrial and energy. Yeah.
Yeah. Defense, 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 defense.
Hmm.
4 of the 10. Energy. 1, 2, 3, 4, 5 of the 10 are energy.
Yeah.
Yeah, the only one is Sirius, interestingly, and Sirius is one of the top short covering candidates.
Oh.
They have one of the
Okay.
most number of shares short.
Uh-oh, we got another GameStop coming up. I'm just kidding. I don't
Yeah,
know.
could
I have
be.
no idea.
And then the losers down here are healthcare staples. A lot of healthcare.
Yeah, look at that cruise line, Norwegian cruise line getting whacked.
Right. Yeah. Yeah. Cruise lines actually were doing well for a little while.
They were for a while, yeah. Yep.
So it's interesting to take a look at, which actual stocks beyond just the sectors, but which stocks are moving for the week. So this, I'm going to save this one for the next session.
Okay.
We'll talk about risk on, risk off.
Very, very. I look forward.
If I go back here and look at the charts again, I want to show you the sector performance just for Friday.
Okay.
This is just Friday. So here's the S&P down here. So everything above the S&P outperformed. Energy, utilities, staples, healthcare, financials, real estate, materials.
That would be very risk off.
That would be risk off. That is all defensive groups.
All defensive, yeah.
And all the aggressive groups are underperforming the S&P. Just for Friday, though.
Yeah. Okay.
So I mean, you can look at all the way back 1 week, 1 month, 3 months, et cetera, all the way back. If we go to year to date, just for the starting from January, you can see now these are all the aggressive groups. Even still, year to date, they're outperforming the S&P. But more, if we zoom in more recently, doesn't look as great.
Very cool. I look forward to the next discussion where we talk, is the market set up risk on, risk off? But
yeah, we're going to look
at
a few. We'll look at a few different things from there.
Very, very, very cool. One more time, the website is
breakpointtrading.net. If you want to sign up for the newsletter, you can just you don't even have to sign up anymore. You can just go out there and get the newsletter. Yep. I am sending out reminders to everybody. I did that for the first time this weekend. If you don't register your email, then you're not going to get the reminder, but you can always go out to the website and get the newsletter.
Folks, you got to get the website. You got to get the newsletter, from the website, breakpointtrading.net. I look forward to it each week.
Yeah, there's a lot in there. There's a lot in there this week, actually.
Mm-hmm.
All right.